Welcome to the Financial Modeling Podcast, Short Stuff, where we discuss elements of the Financial Modeling Podcast in 5 minutes or less. Stay tuned for today's financial modeling tidbit with your host, Matthew Bernath.
Hi everyone, and welcome to today's Short Stuff episode. Today we're going to be chatting about the financial model audit. What is the financial model audit, and why is it so important? When you build a financial model for every deal or every transaction, typically there is one financial modeler and perhaps a few members of the deal team, a few members from the sponsor and clients and various banks who review the financial model. Now, when you build a financial model, you really get into the detail, you really go in depth when you're building the financial model. It's quite difficult to sometimes get your head out of that detail. There might be some logic errors, there might simply be some assumption errors where your assumptions in the financial model aren't tying up to what the legal or finance documentation is saying. These days, it is typically a CP or condition precedent to every deal closing that the financial model gets audited. And I personally think this is a very good thing. So what happens is that the financial model gets sent to a financial model auditor, and there are quite a few of these financial model auditors around the world who really specialize in analyzing financial models, reviewing them, understanding them, checking if all of the assumptions tie up to the documentation, checking that the logic is correct and the financial model works correctly. And they even go as far as to check things such as the accounting, if the accounting is in line with the accounting standards in the jurisdiction where the project will be taking place, and they can even check tax assumptions. For example, on many projects there is accelerated depreciation, so they'll check if that is being implemented correctly. The financial model auditor typically has various software tools that they run on the model, and these software tools very quickly pick up logic errors, or if formulas have been changed, or if there are any hard-coded numbers where there shouldn't be. And they provide a full report back to the financial modeler for them to go through the model and to fix all of the errors. Before the project closes, the financial model is updated, and there are typically a few iterations of this financial model audit. And then at financial close, the financial model auditor will even sometimes do another iteration where they check that all of the hedging, if there is hedging, has been implemented correctly in the financial model, and they'll sign off on the financial model saying that there aren't any errors that they can pick up, that they're happy with the financial model, that if there are any outstanding errors, they don't affect cash flow, that might affect various covenants, and that's, for example, in a project finance model, and they'll say that they are happy with the model. And really what a financial model audit is it's a third-party independent check of the financial model, that the financial model has been built correctly, that all of the assumptions are in line with the finance and legal documentation, that scenarios have been run correctly and can be run correctly, that there aren't any logic errors, and that the financial model is really a good indication of what we think the deal is. Now, I often tell my colleagues, much to their bemusement, that if every financial model has errors, it's impossible for a financial model to be correct. In fact, if a financial model is 100% correct, that means that we can predict the future. A financial model is just based on assumptions, right? But we need to make sure that the financial model that we've built is reflecting these assumptions correctly. And that's part of what the financial model audit is all about. So, as I said, I think a financial model audit is a really important aspect of financial modeling. It provides you with that independent verification that your financial model is correct and has been built correctly. It provides a lot of the parties on a deal with a lot of comfort that the financial model is correct and that they can rely on it. And it really enables us to become better financial modelers as well. I've certainly learned a lot from my financial models going to audit, fixing those errors, and then I know in future models that those are the things that I have to look out for. I hope you enjoyed this episode of Short Stuff. If you want to know more about the financial model audit, be sure to check out my blog at financialmodelingpodcast.com. And I'll see you again in the next episode.